Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting however with the volume profile on the weekly time frame, which as you can see is very nicely respected, and now we are closing weekly candles above the value area high. Now initially one can think, this is very bullish, right? We're looking for a retest and strong continuation. Especially the word strong is very important, because if we're looking for continuation, we are looking for a wave 3 for much higher prices, which means we want to see volume pick up. And at the moment, also with the breakout over here of this range, volume is not very significant, right? You can see that even the volume is slowing down while we are breaking out here. So that's not something we like to see, and therefore I do keep my eyes open for a potential deviation where price can make a high, possibly return back below the value area high, retest and continue this range in 2024. Now, some of the scenarios that are important for this range to continue is, first of all, this 5-wave impulsive structure. Here we're looking for a wave 1, 2, 3, 4, and then a wave 5. Common target for your wave 5 is between the 1.236 and the 1.618, taken from the high to the low of this wave 4, giving you a target area between 51.6k and 55.6k. After this wave 5, you want to see a retracement to the downside, and there is two scenarios that want a retracement to the downside. First of all, it is a double 1-2. The first 1-2 is already finished, wave 1, wave 2, and then we have the 5-wave impulsive move that I just showed, right? 1, 2, 3, 4, 5, finishing the second wave 1 in green over here, and then we're looking for this wave 2. Move down, move up, and a move down. A 3-wave corrective structure in this wave 2. Most common target area for a wave 2 is between the 0.5 and the 786, which is also between the point of control and the value area low of the range, which is very nice to see. Target area at this moment would be 38.9k to 30.9k. However, the higher price is moving over here, the higher these fibs will go, as well as these fibs are taken from the low to the current high that we have. A less common target for a wave 2 is the 382 at 42.2k, and the rare target is the 886 at 28.1k, but preferably you are not losing this very important support resistance area between 32.5k and 30.6k. The second scenario is the bearish scenario, where we have an ABC to the upside, and after C we expect more continuation to the downside. So in this case we want this support to be lost, and then we look for much lower prices. However, we are currently ranging above the 1.618 trend-based fib extension, taken from the low to the high of A to the low of wave B, which is less common for a wave C, right? The 1.618 is still a common target for C as well, but starting to range above the 1.618 is not really what you like to see, so it lowers the probabilities a little bit. However, even if price is ending somewhere over here and we start moving to the downside, this being an ABC still has probabilities, and we're still going to observe how price then moves to the downside, because depending on the move to the downside, we can look for a wave 2 and continuation, or more lower prices to come. The most bullish scenario is that we are already finished with this double 1-2. So we already have a 1-2, and the second 1-2 is already in on top of the point of control. In this scenario, we also eventually like to see a bit of a retracement. 1, 2, 3, 4, finishing wave 5, therefore finishing the blue wave 1, and then we want to see a retracement. Now, of course, the retracement does not have to get back inside the range, right? Depending on how price is moving to the upside to finish this wave 1, we can also have a retracement where price is going to retest this value area high. So we get a 5, retest the value area high once again to finish 2 over here, and then continue for wave 3 to the upside. This, of course, is the most bullish scenario, but therefore we want to see volume pick up. And at the moment, you can clearly see there is a bit of a trend to the downside here, if we look at the lower volume as well. So we want to see a corrective structure and impulsive continuation to the upside. Now if you then go to the 4-hour time frame here, then on the 4-hour time frame, this is the bullish scenario here. 1, 2, 3, 4, and we are still looking for another move to the upside in the wave 5. However, what is lowering the probability slowly is the length of this range wave 4 over here. The fib times, the vertical lines taken from the high to the low of 2 and put on the high of this wave 3, comparing wave 2 with wave 4, show that this range over here is almost 6 times longer than wave 2, which is uncommon, and the longer price is ranging here, the lower the probabilities that this wave 4 is matching this wave 2, and the low probabilities for this bullish scenario here. There is the alternative where this wave 3 moves on top of this high over here, and this is now your wave 4, but I don't yet like that count, so it is something I keep an eye on. But for now I still prefer this one over here and keep an eye on this count. The most common target area for a wave 4 is between the 236 and the 05, 50.3k, 47.4k. 0.618 is an invalidation for a wave 4, and the 146 to the 236 area is a less common target area for a wave 4. In the bearish scenario, we're looking for a finished 5-wave impulsive structure to the upside and a bearish continuation. Now there's 3 scenarios for bearish continuation. You have an impulse 1, 2, 3, 4, 5. You don't want overlap between 4 and 1, but at the moment over here there is a lot of overlap on the lower time frames. Then you have a potential diagonal, which can definitely work over here, and you have multiple 1-2s before then a bigger wave 3 to the downside. But it is weekend, and generally wave 3s do not appear on the weekend, so therefore a diagonal has the highest probability in this bearish scenario where wave 5 is in, and we look for much more downside. So that is the scenario I'm going to keep an eye on. If we look at the support resistance areas around price, then we have the blue box here between 49.1k and 49.8k. However, just above we of course also have the support resistance area, which is something we have to keep in mind, between 50k and 50.4k. Above price we have resistance, the daily naked point of control at 51,650, and also this blue box here, 52.2k to 52.4k. When we look at the CVD divergences, then you can see that we do have some bullish CVD divergences still, this low over here and this low, higher low in price, lower low on the CVD. But what you can also see is that this pivot is on the left side of the recent high, and preferably we look at CVD divergences on the right side of the recent high. Now something that's been a trend with this move to the downside is that we see smaller bearish CVD divergences building constantly as price is moving to the downside. And once again we have bearish CVD divergences here, lower high on price, higher high on the CVD, and this is only invalidated if price can move above this high over here, and then we have to observe what price does at higher prices when it hits the resistance area, but it is good to know about. So if we then look at the probabilities of the different scenarios, then on the daily time frame we are looking for a retracement at a given moment. The volume is slowing down in this uptrend as well. We are still above the value area high, so that is the main area of support over here as well, which is in confluence with this little order block here around 49.8, 49.9k. So this is very important. Losing this and we can continue this range towards the downside. I would still like to see some more local confirmation for a retracement to already start. On the 4-hour time frame, probabilities at the moment here are neutral. Wave 4 is getting very long at the moment compared to a wave 2 if we think about the 1, 2, 3, 4, 5. Right, for the bearish scenario, however, I do like some more confirmation, and there is still bullish CVD divergences as I've just shown as well. Even though there's one pivot on the left and one pivot on the right of the recent high, it is something I at least take with me and something that I observe, but I want to see local strength as well. Also, this high that we have at the moment does still look a little bit like a corrective top instead of a wave 5 top. And I will highlight some of the scenarios that I have in this local range in the live stream this afternoon. I hope that this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.